I would like to start with focusing in on zooming in on the PEA. It was negatively received, probably due to high initial capital cost and capex for the advanced exploration, but we know that that's not really the plan that you will follow. So could you just summarize the PEA for the viewers?
Well, I think to start off that there was some, I would say, perception that it would be a completely bootstrapped operation where we would start mining with very minimal capital and then, slowly ramp up production from, and reinvesting the profits made from that bootstrapped model. And I think that's what some people expected. I would not say that there was a high capital cost. When you look at mining projects, in this day and age, having a capital cost of under $60 million to go from advanced exploration into commercial production, and even when you look at combining both advanced exploration and everything to get to commercial production at over 4,000 tons a day, that is only less than $100 million. So I would not call that high capital costs at all, but it really goes back to the why did we actually initiate this PEA, and what were we trying to accomplish? And back in November of 2022, when we closed the acquisition of Lonmin Canada, and at that time and currently, we're in discussions with large strategic investors as well as mining companies that were very interested in what Magna was doing here in Sudbury, very interested in the acquisition of Lonmin Canada and what that meant for the company, what that meant for our plan going forward. And when we came out with the resource last November, and this is the same resource that was used for the PEA, the question that all of them asked us is, all right, now that you have this resource, how much of it is actually mineable? How much can you go and extract from this resource at a profit? And what kind of mine life does that have? And does it still make sense to go and build Shakespeare, or are you going to just toll mill for the life of mine of Crean Hill? So those were the two big questions. So when we approached Stantec and engaged them to complete the PEA, that's what we really tasked them with, is show us, how big can the mine be based on this resource, and how long can the mine life be? How much nickel can we, potentially produce in ore? And we also wanted to have some kind of demonstration that it was worth proceeding to a study to combine both Shakespeare and Crean Hill together. So that's what they were tasked with, and really that's what the PEA demonstrated. Now, during the time while we were completing the PEA, we did some drilling that, I'm sure everyone that listens to this is aware of, that was some really spectacular holes. And what we began to realize is, especially in the footwall areas, is many of these holes did not correspond well, were much low, or the drilling showed much higher grades than what was being represented in the block model. And so there was a period of time last spring that, we paused the PEA for a period of time while we completed some drilling in the 109 zone to better understand, how this high grade we were drilling, this high grade, I'd call it structure, high grade trend in the 109 zone kind of related to the block model, and how much of a difference does that make in the actual value of what you could mine there, based on what we were putting in the PEA. Long story short, as we announced those results of that 109 drilling last June, but by that time, we recognized that the PEA is 80% complete. We need to complete it. Stopping the PEA to finish our drill program this year, update the resource, and then essentially restart it didn't make sense. So we completed the PEA as per what was, the engagement sort of direction that Stantec had. And we answered those questions that we initially set out to answer. This mine at a $123 NSR cutoff grade in the underground could, potentially have more than 20 million tons of mineable resource. And, it isn't optimized. It isn't maximized for profits. It isn't sequenced so that, you know, you mine all the highest grade material possible in the early years of mining, and then you mine the lower grade in the later years, which would have a positive impact on NPV. But what it does show is that, yes, this could potentially be a very long life operation of more than 15 years of mining. And, you know, when we would combine it at a lower processing cost, could potentially even extend that further, processing through a future mill at Shakespeare. So that is really what we went to accomplish. And I think we just need to explain that to more people. We spent the last approximately 2 weeks, you know, communicating this with investors. And I think now we're starting to see that people understand we have a strong balance sheet. We, you know, we're going to be putting out financials soon, but as of our last financials we announced as of the end of March 31st, we had over $20 million in the treasury. We're going to spend approximately just over $7 million this year in exploration. So that will leave us with a very healthy budget to have a similar size exploration budget next year, you know, of probably 20,000 plus meters. So, you know, a lot of things we can do, you know, over the next 12 months. And we don't necessarily need to raise capital anytime soon. So a lot of catalysts coming. We're not going to go out and raise $48 million for advanced exploration. That's for sure.
You will do the advanced exploration bulk sampling on the surface of the 109 footwall zone in Q4 this year. And my question is, how many tons are you looking to mine and sell? And what permits are required in order to do the advanced exploration?
Yeah, that's exactly right. So the surface sample, and this is in an area of the 109 footwall zone where we've done this definition drilling. So now we have tightly spaced drilling. We have an internal model, a geological model and resource estimate for the 15,000 tons that we currently have planned in this area. And what this is going to allow us to do is once we drill blast it, and it's, you know, 15,000 tons is a good size sample, but it's not a lot of work and it's not going to cost a lot of money. It's literally about a week and a half of a drilling blast company to come in site, drill blast, crush it, and then we'll run it through a sample tower, and then it'll be trucked to a third-party mill. So all in all, it's about a 3-week project. But it's going to tell us, does, you know, our understanding of the 109 match up with what the actual grades we can mine are? And that's going to be huge when we go underground and start test mining and designing stopes and understanding, you know, how to maximize sort of value out of the 109 footwall. Now, as far as permitting we need for that, what we need is to amend the closure plan that we currently have. And the closure plan on Crean Hill is based on the historic mine and what work was done. It's a very simple amendment for what we're calling advanced exploration, to go take this surface sample, do some underground mining, and that will allow us to access all the way down to the 550-foot level. It'll allow us to go in and sample the 109 footwall, the 101 footwall, as well as the intermediate zone. And, you know, we believe that we'll have that closure plan amendment completed by early Q4.
Excellent. And so in other words, you're looking to do this in November?
Yeah, there's a couple caveats to that. So we could do it as early as November. We've already had contractors out to site. Again, very simple mobilization. There's 2 things that we need to complete before that. One of them is we need to complete the definitive agreement for ore selling. So we need to get those terms in place. That's well underway. I hope to have that completed by early October as well. So, you know, it's on track. The other thing we need to do is, with that, we need to determine what the mill would like or what is required for sampling. So as I mentioned, one of the things we'll be doing in this process, both underground for the surface sample and then for any ore selling that we'll do in the future, is we need to sample a representative sample of every lot, and a lot is anywhere from 2,000 to 4,000 tons that leaves the property. So how other mines do it in Sudbury that sell their ore to the mills is they use a sample tower. So it basically has a splitter that you put the crushed ore into, and it splits out and gets a representative sample. And that representative sample gets assayed, and that is what basically, you're recognizing you're sending to the mill. So we need to get those terms developed, and we expect that once we have that, we'll just need to construct this sample tower to meet those specifications. We're looking into doing that right now and getting contractors, but we need to get those specs before we can start building it.
When are you looking to announce, or will you announce sort of the ore selling agreement with either Vale or Glencore?
Yeah, once we have it finalized, then we'll announce. Because I think that's going to be, very key and important to, a part of the process for us to continue to advance Crean Hill. So again, we would hope to have that in sort of the first half of October. Again, sometimes these negotiations will last a few weeks longer, but that's sort of a target date is sort of mid-October, first half of October. And yeah, we definitely, we won't be able to announce details. Some of that will be confidential and exactly what its payables are, but we will be able to announce where we're sending it and let the market know that we're moving forward.
Vale is amending the closure plan, but they don't have any rights to buy the ore.
No, they have a right of first offer. So which basically means that if we decide we want to sell any ore, then there's a period of time we talk to them, and they can let us know whether they want to buy it or not. And then if they say they do, then there's another period of time where we can negotiate it. If we don't come to terms on it, then we can take it anywhere else we want.
Great. And by the way, for the viewers, Valpal's view is that the surface sample should generate between 3 to 4 million Canadian in revenue. So my question to that would be, could you give us sort of a ballpark figure on the cost to mine the 15,000 all in?
Yeah, all in cost with building a sampling tower. We're estimating that to be $400,000 to $500,000 with contract mining, trucking, sampling, all in.
The 109 footwall zone is very rich in PGMs and gold. Do you have any expectations on sort of the average grade of the PGMs that you would like to share from the surface sample?
We honestly can't, just for compliance reasons. All we can reference is what's in the NI 43-101. If anyone out there listening is handy with geological software, we have put the coordinates and length of holes and assay results on our press releases, so someone could plug that into a data mine or leapfrog model and get a good sense of spatially what it looks like and do an estimate. But unfortunately, I can't tell you that.
In the resource statement for Crean Hill, roughly 68-69% recovery is assumed for palladium, platinum, and gold, but that differs, especially for palladium and gold, compared to Shakespeare's resource model, where it's around 34-40%. Would you like to add some color on that?
Well, as a general statement, with Sudbury ores, what we see is there's a correlation between recoveries and the amount of nickel and copper in the ores. So when you have more nickel and copper in the ores, precious metal recoveries typically get better. And this is something that we recognized when I was working previously with FNX Mining. We always try to blend stopes and blend zones to have sort of ideal amounts, or at least above certain thresholds of sulfides, of nickel and copper sulfides in the ores, because that helps recoveries. And so with Shakespeare, you have less nickel and copper, and correspondingly you get less recovery of platinum, palladium, and gold. At Crean Hill, it's higher grades, therefore higher recoveries. And this is some of the studies when we look at in the future, how do we blend it? How do we combine and tweak the Shakespeare process, the mill process, to maximize recoveries? This is one of the things we'll be looking at, is how that blending that ore can benefit recovery of precious metals.
Especially on the 109 footwall zone, it's weighted towards PGMs, that the recoveries would be reduced or lower due to lower nickel and copper contents.
Yeah, and so again, this is really key to this bulk sample we're doing. What we've recognized is, although overall, over the entire resource, the amount of nickel and copper is relatively low. Sort of looking at that, 0.2, 0.3 nickel, 0.2, 0.3 copper, and then, anywhere from 5 to 10 grams of PGMs. But in certain areas in this high grade trend, you can have, upwards of 4% nickel plus copper over, narrower widths. So again, part of this bulk sample we're doing is looking at, okay, what is the right blend, the right cutoff, and how do we sort of maximize the payables, especially if we're going to be selling ore from areas like the 109 footwall. And so how much of this high grade trend do we take with how much of the lower sulfide, peripheral type high PGM rock and blend it together. So it is again, the reason for the advanced X is to get better understanding so we can make the best possible mine plan, mine design going forward.
As part of our advanced X, we'll probably do some work in the 109 footwall zone. And then a little deeper down on between the 300 foot and 500 foot levels, we'll likely go into the 101 footwall zone, which we've released drill results over the past several months on as well. And also maybe what's known as the intermediate contact zone, and possibly this 105 footwall zone as well, which is, that's something new in terms of our drilling. It's not necessarily a new zone in the deposit overall, but we've only recently put a few holes into that area. So just to give you an idea of what the 105 zone is and what the 101 footwall zone are, and how they sort of relate to each other. So this is just basically a 3D model. The historic workings in gray, okay? All the little colored dots you're seeing are drill hole composites that are better than 1.5 nickel equivalent grade, or 1.1. Sorry, nickel equivalent.
1.5.
1.4 or 1.4.
Yes.
1.1.
And that is the cutoff grade for the underground resource.
That was our resource cutoff grade for underground.
Yes.
Right? And it's colored by this legend in the corner here. So that sort of cyan, bright bluish color are the sort of highest grades.
And just by the way, to give the viewers better, so the top here, is that the surface level, or where's the surface?
Yeah. So this would be surface. We're looking straight north. So, zero elevation would be right along the top here. Can you see my cursor?
When you say that we're looking straight north, does that mean that it's sort of going into the screen or to the right?
North would be into the screen.
Into the screen. Okay, perfect.
Yeah. What I'm showing here are the historic workings, and then all the drill hole composite assays from drilling.
Yeah.
That are better than that 1.1 nickel equivalent over at least 5 feet, just to give an idea where the zones are. If I look from above, the main ore body, historic mining, and the contact mineralization would have been sort of running east-west.
Okay, and this model incorporates or drill results after or post acquisition of
It
Crean
does. The current resource model doesn't yet incorporate our drilling, but our drill is also reflected in these drill hole or in this 3D model, I guess, right?
My first question would be, so could you showcase the 105 footwall zone and sort of describe it, and where's it located, how deep, where does it start, and sort of the geological properties of it?
Sure. So there's the 109 footwall zone, which is immediately behind the main ore body, which is the most of the majority of the mining historically. A little bit further to the west is the 101 footwall zone, which comes off the intermediate ore body, off the contact, running sort of striking southwest. Now the 105 zone, it looks like, and I'll just turn on a little wireframe to show you sort of where it is. What we call the 105 footwall zone appears to be a structurally related massive sulfide vein system that kind of comes off the main ore body, but bridges between the main ore body and the 101 zone. So it's a structurally controlled vein system that looks like it kind of joins between the two other footwall zones. So that's this red shape that I've got.
From what depth does it sort of start?
It sort of merges into the 101 zone around the 300 level. So
The
between
300
the
level,
3
that
and
is
500
on a feet level.
foot level.
Foot level, yes. How many holes have you put in it as of now?
So just to clarify, the 105 zone sort of bridges between the main ore body and the 101 ore body and runs from about the 300 foot level down to about 1,500 foot level. So we've only recently drilled a few holes in that area, and I believe there was one of those holes was released in our previous or our most recent news release. And then we've since drilled a couple other holes that will, the results of which will be coming out in the next few weeks, probably.
Is the 105 zone in the current mineral resource statement?
Parts of it are included in the current resource. Yeah, we've been just expanding on it a little bit. It's a zone that's very similar to 101 in that it seems to be sort of sharp-walled, massive sulfide nickel-rich veins, as opposed to the low sulfide, high platinum palladium zones like the 109. So it's more similar to 101.
Okay, so it's more nickel-rich tenor
yes,
rather than PGMs.
And higher sulfide, sort of sharp-walled, massive sulfide veins. Unlike the 109 zone, if you recall, tends to be lower sulfide, high PGE, or high platinum palladium gold footwall zone. So it's very similar to 101, nickel-rich, massive sulfide veins. It's a structure that's in a different orientation that kind of bridges between the 101 zone and the main ore body.
By the way, the 109, where does it start?
So the 109 footwall zone starts right at surface, and it's been defined and drilled down to about the 350 meter level. So sort of about this elevation here where my cursor is. And then, like I said, the 101 footwall zone is a little further east, below some of this historic workings here, and then continues down.
You will be mining and processing 15,000 tons from the surface, probably in Q4 this year. Where will that be?
Yeah, so like I said, the 109 footwall zone comes right to surface. We'd probably do a couple of what are called benches or a couple of excavations near surface. So starting at surface, we blast out what's called a bench, and then we'd probably do a second bench after that one was done, and totaling about 15,000 tons from surface.
You passed through results at the 109 footwall zone has firstly been a much higher grade than in the reserve or resource statement rather, and it has also been very PGM rich. Do you expect your 15,000 ton sample to be overweight of platinum, palladium, and gold?
Yeah, I mean, some of the drilling we did last year did identify some higher grade, higher sulfide content mineralization than some of the previous drilling was that comes near surface. So yeah, a portion of our bulk sample will be designed to go through some of those areas so we can better understand the continuity of the veining and the higher grade mineralization.
Great, and with that I would like to switch over to the advanced exploration bulk sampling that will start in Q1, hopefully in Q1 next year. And in order to do that, what permitting activities, I mean, you will already amend the closure plan, but other than that, what permitting activities are required?
So other than that, we require a permit to take water, and that's for dewatering the underground working. So that's been submitted. It is typically a 3 to 6 month process to get that approved. We're going to be processing, as per the permit that we've drafted. Idea would be to go down one of the shafts, either the main shaft, historic shaft, or one of the fresh air raises that are on surface to dewater, pump the water out. That water would report to the same water treatment plant the Vale is running that treats all the water that comes off the site. So it's the same discharge point. It's the same water quality is what's being treated right now. So there's really, it's you could almost look at it as an amendment to the current permit, but we actually applied as a separate permit because it's a separate location technically. But yeah, so we expect to have that in 3 to 6 months. And, once that happens, we can start pumping at pretty high rates, which will allow, water to start going down. And it'll take a couple, well, it could take, up to 6 months of pumping to get down sort of below the 400-foot level. But, once we start pumping, we can start developing the ramp from surface, because we'll be starting well out into the footwall, far away from any existing infrastructure. So, we probably have, with portal development, setting up fans, setting up the heaters for the underground mine air and all of that. That'll take, 6 to 9 weeks to get all of that set up. So we can be doing that while we're pumping and getting things started. So we think it'll all come together, in the first half of 2024.
The permit, the discharge water, is that a federal or provincial permit?
That's a provincial permit. It's that's through the provincial government's agencies here. And again, because we're not looking to discharge into a new water body or anything, it's going through the same processing plant that's being operated right now. It's a very simple permit and we don't see it having any issues with it.
Once you receive that permit, will it start right away, or could you sort of describe the process from the point where you have received the permit to the point where you're actually beginning to develop the ramp?
Yeah, so once we have the closure plan amendment, we'll do the bulk sample. Now, ideally, we would do the bulk sample, and once we have everything set up for the bulk sample, the sample tower, and the crushing, we would just continue with development. So everyone's all the contractors are there at the same time. There's no gap in between. Depending on factors, there may be a gap from the surface sample to the start of the underground portal by, a period of weeks. This is the scheduling, we'll have to figure out, but it won't be long. So we've already put out tenders to contractors, and we're in discussions with contractors on that to select the contractor of choice to do the work. Again, it's a fairly simple, driving a ramp and a portal, cutting into, the upper levels below where the bulk sample will be taking, and actually driving a drift down multiple levels in the 109 to get, map it, sample it, understand the continuity of the mineralization, and then continuing the ramp down further at depth, further to the west, to access the 101 footwall and the intermediate. And again, we'll take multiple cuts, multiple drifts at different elevations through those zones to, again, better map, better identify how is it reconciling against the existing block model, do some underground drilling, and then do some test mining. So that's sort of how it'll all look. In advanced exploration, we will be shipping, we'll call it test mining material. We won't call it ore yet, to be proper, but test mining material sporadically at first. So it will be, some material from the 109, and then there'll be a period of, again, sort of 8 to 10 weeks of development to get down into the next areas we'll be testing in the intermediate zone and in the 101. And then again, we'll be shipping some, again, test material from that. So it'll be a bit sporadic with shipments to get started. But once we open up all those areas, that's when we'll start looking at taking test stopes. Because again, in the PEA, in the block model, when you look at designing stopes, we're seeing a big disconnect in the footwall zones, not so much in the contact zones. Those are fairly well understood, but in the footwall zones, a big disconnect between what the block models are saying and what the drilling is saying. So much like my experience with FNX mining, when we mined footwall deposits similar to the 101, similar to the 109, the best way to design and model those is to actually go in and drive through the zones, drive through them, follow the mineralization. And, for example, at the Morrison deposit at Levack mine, when I was managing operations at that mine, we went into the Morrison deposit, which was sharp-walled, massive sulfide veins wrapping around blocks of breccia. Very, very similar. When I see the drilling and we do our interpretations in the 101, it's exactly what I used to see, before we got into mining the Morrison deposit. And what we did there is we went in and we mined along these veins, silling them out, taking the massive sulfides, leaving pillars where there was big blocks of breccia, and we'd wrap around, we'd drift around them. And in the first 2 years of mining there, we mined over 10% copper, 8 grams of PGMs, and 1.5% nickel. Now that was a copper-rich zone. The 101 is a nickel-rich zone. But again, our block model and our resource, we're estimating 5 to 6% copper, and we're mining over 10% copper. And it's just because it's very complicated with these breccia systems and how veins can wrap around blocks, to get detailed when you have sometimes 50-foot spacings or, 15-meter spacings on holes. A lot can happen in between. So the block models tend to smear grades and sometimes lower dilute in these types of areas. So that would be our plan. Go in, do a bunch of silling, demonstrate we can mine much higher grades. And if you look at, for example, in the 101, we announced hole number 5. That's a prime area, and that's one of the spots we'll be going in and doing some test mining. But that's where we intersected 31 meters at 4% nickel. Now, just below that and off to the side, we had holes number 3, I believe, and we had a few other holes in there that had nice intersections, 4 to 5 meters, 3 meters, some of them up to 6% nickel. But the PEA in that area would estimate those grades at less than half of that, which is a big difference when you're talking about you're still paying for the higher cost of processing, going in to mine more selectively, having more pounds of metal in every ton that you need to ship and process and crush. All those costs stay the same. So if you can increase the value of that rock, your margins really shoot up. And that's what we think we can demonstrate with this advanced exploration. And, we're pretty excited about it. There's a lot that we can't say because we've calculated and done internally. But I have to say, we are not going to need $48 million to do advanced exploration up front. We believe that there is a potential to go in and do much better. And, I think if we were to even scale it back and say, to start, we could just go in and do some sampling, take the surface sample, and you had some estimates on what you think that could be worth, that 15,000 tons, go down, do some silling in the 109, ship that, be able to demonstrate how that reconciles against block model. That will generate some revenue. That revenue, could be reinvested into continuing development. When we get down into areas of the 101 and the intermediate where there's some big thick zones and potentially some better grades than what the block model is demonstrating, again, do some work there before continuing on down to the 550 level, which will open up more horizons. So if we take it in a bootstrapped approach, that could reduce the capital costs substantially from the PEA. The PEA assumed that there's no capital constraint on anything. You just want to build this as big as possible for as many tons mineable as possible. Now that's a scenario when we're talking with groups like Mitsui, who we announced last year we have an MOU with and we're still in discussions with. For Mitsui and groups like that, that's what they want to see, because $100 million of capital is nothing for them. They're a $50 billion company. So those types of investments, for a long life operation are exactly sort of the niche they're looking for. For a company like us on our own, that cost of capital is high, bootstrapping is the right approach. And again, this is sort of my experience with FNX Mining, where we get one mine rolling, you start making cash flow, you reinvest that into exploration, you reinvest that into developing other projects. That is the proper approach for a junior, in my opinion, especially when capital costs or the cost of capital is high.
So if we assume that you receive the water discharge permit and the closure plan is amended for Crean Hill, so in other words, you can start initial development and advanced exploration bulk sampling in next Q1. Where will you start going in or going underground?
So initially, the first zone or ore body that we would come to or pass by would be the 109 footwall zone. So we'd likely drive a couple of sills in there and see what it looks like underground, see what the continuity of the ore is there. As the ramp continued towards the 300 level and the 500 level, we'd come near the intermediate contact zone, so the copper nickel contact zone, and then continue on towards the 101 footwall zone and then eventually the 105 footwall zone. So it's just as we get deeper, we can access a couple more areas like the 101 zone and the 105 zone. So the initial ramp would likely go down to the 500, somewhere between the 300 and 500 foot.
By the way, talk about a sill. Is that that is not a ramp, or what is that?
So you would have the main access ramp going down to deeper levels, and every so often you would do some development at a given level into the ore body at various levels, and those are just called sill development. So eventually you'd set yourself up where you drive sill levels into the ore body at elevation, say somewhere between 60 and 80 feet apart in elevation, and you excavate on those elevations and then eventually stope in between them, right? So they're setting yourself up for stoping, mining at the top of the stope and the bottom of the stope, and then you blast the stope and mine from the lower sill.
Is there an existing ramp from the 109 zone, or will you have to that you have to dewater?
No, there's not an existing ramp from surface, but we will have to dewater the old workings as we go down, because at various elevations we may intersect some of the old workings with our new development, our new ramp, and we'll also want to ventilate from some of the old ventilation. So as we go deeper with our ramp, we'll dewater the existing workings at some level below where we are with the ramp. Again, so the gray represents the historic workings and historic stoping, and the sort of dots and lines that you see on screen are the drill holes that make sort of ore grade over ore widths. Yeah, our advanced exploration ramp will probably start at surface somewhere over towards the 109 zone and continue decline and ramping down till we get to the 300 and 500 foot level, which will give us access to the 109 zone near surface initially. Then we'll be able to get into the 101 footwall zone, which is over in this area, and as well as the intermediate contact zone. And then a little lower down below that, you'll also get into that 105 footwall zone, which we've most recently been doing some drilling on.
And where is the existing shaft?
Now, the existing shaft, if I look and turn a little bit, is just south of the 109 or main ore body and 109 footwall zone.
So you won't actually, at least for next year, use the shaft?
No, but we will dewater as we drive our development, our advanced exploration development. This is just a conceptual design of the ramping and development that we would do. So we collar a portal near surface, continue down until we could access the 109 footwall zone below surface, continue ramping down, tie into some of the old workings where we could establish ventilation loops. So we would dewater as we go, the historic working.
From what level will you actually mine the first ore?
I mean, as currently the conceptual plan, again, starting the ramp at surface, we probably access the 109 footwall zone again about 100 feet below surface. The 109, then we'd continue ramping down to about the 350 foot level. And at that elevation, which is right about here, we'd access the 101 footwall zone, but also go into the intermediate contact zone in that area as well. About the 350 foot level would be where our first sills or our first accesses into those zones would be.
What mining method will you be using?
As part of the advanced exploration, we likely won't do any large scale stoping, but what we will do is at various elevations, we'll drive into the ore body or excavate into the ore body on a given level and mine ore or follow the mineralization on those levels. And then do the same thing, say 75 feet below, so that we can better understand the continuity of mineralization sort of vertically between those levels, but also on a horizontal plane, the lateral continuity of mineralization as well. So the mining that we'll do as part of advanced X won't necessarily be mining stopes. It'll be what's called development ore on all the levels that we access each of these zones.
Because I mean, in order for you to really bootstrap and fund it, you have to mine. You have to really. I mean, what one truck is 30 tons of ore. You have to mine extremely high grade ore or rock. In terms of sort of mining widths, how narrow vein could you potentially mine? Because yeah, I've had some ultra high grade intercepts that are quite narrow.
So, you know, as far as the development mining initially, that will probably be in the sort of 8 to 10 foot wide range, the development in the sills. And it really is dependent on the ore body and what the mineralization is on a given level. Some of the 101 zone, like you said, can get very narrow, but there's other areas in there that are, 10 to 15 meters wide. So, it really depends on what we're seeing in each of the given ore bodies on how sort of wide we'll do the development or development mining.
What is the density of the rock that you're mining?
So massive sulfide would have an SG of about 3.5 to 4. Yeah, depending on how massive it is. The typical footwall or host rocks are in the range of 2.8 SG. And then the more sulfide content, it moves up towards 3, or like I said, as you get massive sulfide, moves up towards 4.
Just to give the viewer some sort of understanding, so if you have a cube of 2 meters and then you have 3 tons per cubic meter, that would be enough to fill a truck.
So it'd be, initially from starting the ramp, it would probably be 3 to 4 months before we had our first drive down into the 109 zone. And then in the range of, 6 to 9 months or so before we'd be starting into our first sills into the 101 zone or intermediate zone. So in the sort of, I guess, 6 to 12 month range is when we'd be doing most of our development in ore.
During the 2-3 first months to get down to the 100 foot zone, how much ore or rock do you expect to be able to mine?
Yeah, I mean, at this point, we haven't done any detailed modeling like that. But like I said, on each of the levels that we drive into the ore body, we would follow the ore for however wide it happens to be on that level and whatever strike length. So, on any given level, we might drive in the ore 100 feet, 200 feet, that sort of range, I guess. It really depends on the strike of the ore zone on the given level.
You're permitted for 400,000 tons. That's still a fairly significant amount if it's high grade. So in order for you to mine the 400,000, I mean, of course there will be a gradual ramp up. But what are there any sort of bottlenecks?
No. As long as we get our exploration ramp down to the various zones, establish a ventilation system or a ventilation loop so that we're exhausting and taking fresh air down. And as long as we keep the dewatering and as we go, no real bottlenecks. As you reach deeper elevations, you can access the ore on various levels, and you're accessing more of the sill levels, which are setting yourself up to do stoping, right? So you've got more active areas in ore the deeper you get, and set yourself up for future stoping. So part of that advanced exploration, like you said, the 400,000 tons, we'll be doing development ore, setting ourselves up to start stoping as part of that 400,000 tons. So yeah, if part of the 400,000 tons that we're permitted for will involve stoping, but a little later on after we've developed some of the elevations and sills.
Are you just mining sort of the breccia structure in the footwall, or are you also mining contact mineralization?
Yeah, so yeah, part of the advanced exploration is planned to go into the intermediate ore body, which is a contact nickel ore body as well. So, we've designed the exploration program to go into at least 3 different ore zones that have sort of different characteristics, so we can better understand and better understand the continuity of mineralization in each of these different styles.
When you go down to the 100-foot zone at the 109, do you have any sort of expectation on what it? I mean, we don't have to talk exact numbers or anything like that, but sort of this distribution between nickel, copper, tenor, and PGMs.
Yeah. So again, the 109 is a higher PGE zone. So I would expect grades anywhere from say around the 1% copper range. Maybe similar nickel grades, but in the 8 to 10 grams per ton of PGs. So that sort of range.
Yeah. How much for nickel? Around 1% nickel?
Yeah, typically there's sort of equal amount of nickel, equal amount of copper, and in the range of 8, 10 or higher platinum, palladium, and gold.
You have reported 4,700 meters of drilling at Crean Hill. You still have, but you have drilled 14,000 around that, and you will be drilling a couple of probably 4,000 more meters of drilling at Crean Hill. Of the drilling that hasn't been reported, where are most of that coming from what zones?
Yeah, so over the last couple of months, we've continued drilling on the 101 footwall zone to better define that. We've done a few more holes on this 105 footwall zone that we talked about in our last press release. We've done a couple more holes on the down dip, so down the plunge deeper on the 109 footwall zone, and also a couple of holes, more sort of grassroots exploration to the east of the known ore bodies. So it's sort of several different areas, and like you said, we've only released about 6,000 meters worth of drilling, and that's really due to delays or not delays, the time it takes to get and receive your assays. So in the next several weeks, we'll likely put out another release with another batch of drill holes. So as we get a sort of a set of drill holes and all the results back, we tend to release them in sort of batches.
Crean Hill is a past-producing mine. Could there be any potential issues with, okay, you have the shaft, but you also have probably old stope that perhaps haven't been backfilled. Could that present any difficulty?
Not necessarily difficulty, but you need to be more cautious when you're doing excavations and mining. Several of us at Magna here have had experience rehabilitating and mining within historical mines. So what's called remnant mining in and around old stopes and old workings. A lot of times you have to do a little bit of test drilling to make sure you where you believe that stope is actually in the right spot. So it's just you need to be a little more cautious. Yeah, and understand was a given stope filled with cemented rock fill, or is it an open stope? That kind of thing. So it's just a lot. It's doable. You just need to be more cautious as you approach some of the workings.
What would development at Crean Hill would you have to do in order to be able to sustain 2,000 tons per day? Call it that underground mining.
Yeah, exactly. So the advanced exploration as it's sort of currently planned goes down to the 500 meter level. We after we likely wouldn't stop developing that ramp, we would continue going deeper and deeper, which opens up more and more areas. So, depending on how the advance rate of the ramp, really set yourself up to increase the amount of tons per day you're mining. So, it likely would be sort of a continuous process right from advanced exploration and then ramp up to commercial production.
So how many tons are you permitted to mine and process under the envelope of the advanced exploration?
So the advanced exploration closure plan, and again, it is not yet has not been approved and filed, but as drafted, we wanted to give ourselves lots of flexibility so that if we decide to just continue, because we have successful advanced exploration, and in the future we decide to continue, we want that flexibility. We have included 400,000 tons of ore mining, let's call it, in that plan, test mining. So that would give us a lot more optionality to continue taking out more material from these test stopes in these areas than just doing some sills and some small scale, which we think is a great option to have.
At what zone will you stop, or at what level will you stop before actually doing stope mining?
So we're working on some of that detail right now. It is, we're still receiving assays. We're still sort of updating our internal designs and models. We could go in and take a test stope where we actually sill, let's say at the 25 meter level, and then again at the 40 or 35 or 40 meter level in the 109 zone. And then, if those sills look promising, the next step would be to go and put in a long hole buggy and drill some long holes between those two sills, and then blast it and remote muck it out, and then be able to say, okay, now over a larger tonnage again at depth, this is what we're getting, which is a good indicator of what we may be able to do in the rest of that deposit. We could do that early on, and again, it'll really depend on the plan and the cost of capital, and do we want to bootstrap it as much as possible to create as much revenue to allow us to continue to test other deposits. So that's one way to do it. Another way to do it is to wait until we've silled a number of areas, done all the mapping, additional underground drilling, and then do it. So we could start early on before we even get to the intermediate zone or the 101. Or we could say, we're so excited about testing areas of the 101, we're going to do 2 quick sills at the 109, but continue driving the ramp that entire time and keep the ramp as a priority, get down to the 101 sooner, and then start silling down there, where then that would lend itself to doing some test stoping. We haven't quite, confirmed what the detailed plan will be in the detailed schedule, but, these are the things we'll confirm and get a better understanding of as more assay results come in over the coming weeks and in the next few months.
Do you have any expectations on how? I mean, of course, you will gradually over the next year ramp up sort of the mining rates, but have any expectations how much you will mine next year? Ballpark.
So it'll be dependent on a couple things. It'll be dependent on which month we start actually the ramp development. So if we start in January, it gives us more months next year to access. And it depends again on, do we want to start doing some test stopes in the 109 right away, or are we going to be content with doing some silling in there and then look at doing more of the test stoping at deeper depths, which would mean it's going to take time to get down there, which means you're going to be, maybe in Q2 or Q3 before you get down to these areas, and then you have to sill them, design stopes, come in, drill, blast them. So, it's at this point, it's still a moving target of exactly how many tons we may ship next year. I think the important thing is not about how many tons we're shipped as much as, can we increase the quality of those tons And we believe we can, similar to sort of what we're seeing in some of these drill holes. And when you have sharp walled veins, I think we can. The other thing that's going to be important is, along the intermediate zone, and this is a main nickel copper contact zone, similar to the main zone, where Inco did most of their 20 million tons of mining historically. And along that contact is where you get the semi-massive, massive sulfides. That's where the sulfides settled out, right on the contact of the SIC. And if you mine right along that contact, you can mine some quite high grades, 2+ nickel, 1 to 1.5 copper. As you start to widen out those stopes and go further into the hanging wall, it's sort of gradational, and the sulfides become less and less, and eventually it becomes just disseminated sulfides. And, the grade continues to drop. And sometimes this gradation can go out 30 meters or more. So it's and we did this again with FNX at McCready West, where if you need to sort of increase the grade of your stopes by shrinking them down and mining closer to the hanging wall, closer to the footwall, that contact, your grade gets higher. In times of higher metal prices, you typically want to widen your stopes, because even the 0.6 and the 0.5 and the 0.4% nickel, by taking a stope a little bit wider, can increase your revenue substantially. So some of the test mining we'll be doing in that area, it will be looking at, ideally, how wide do we want to mine these, with the optionality of saying we can take out a primary stope along the contact, and in the future, once we have backfill, we can tight fill that and then take a hanging wall stope. So let's say, for example, and this is just an example, but let's say you have a stope that is 25 meters thick in the PEA that's designed. There can be potential, instead of mining a 25 meter thick stope that maybe comes in at 0.8 nickel and 0.8 copper, you can mine two stopes, one that's 8 to 10 meters wide, but at 1.3 nickel and 1.1 copper, and then a secondary stope that you can mine at perhaps 0.7 nickel, 0.7 copper, but that initial stope would be much higher grade and perhaps have 60 to 75% of the actual value in it, with maybe 20 to 30% of the tons. And these are the type of things, it takes a lot of detailed design and planning to design these stopes, whereas a PEA does a stope optimizer. But again, this is some of the things we want to demonstrate. So we're not going to be sterilizing any mineralization, but we can design it so we can move the higher grade material into the earlier years of mine life to create the maximum amount of revenues when we need them to build and grow the company.
Great. In order to speed up the development, are you considering asking your two largest warrant holders to exercise their warrants? So probably would bring in another 7 million, 7.5 million.
That's something that we always look at what is the most favorable cost of capital, and we explore sort of every avenue. We're very fortunate to have two supportive long-term shareholders in Dundee and Hawke's Point, who not only supported the financing to acquire Lonmin Canada, but have also, continued to be supportive and long-term shareholders. So, that's a discussion we'll have to have with them at some point, and we'll see. But again, if we are to move things forward and it needs some more capital, that's a possibility for sure.
Say that you don't get a grant from the US military, then you have to gradually, you will do that advanced exploration, and you will gradually ramp up the mining rate. But how will you get to a point, or what's the plan to get to a point where you actually would be able to?
Yeah, we have a number of options. So one of the things that, again, the reason we wanted to design and have the PEA demonstrate the size and the quantity is to really be able to continue our discussions with strategic investors, OEMs, and major mining companies that are interested in either investing in or working with Magna. So, the feedback, as these groups that we've been talking to, some of them for more than a couple of years, the feedback since the PA's come out has been extremely positive. And so we do have optionality to have groups like that potentially buy an offtake from us, because we do own 100% of the offtake from any concentrate that's produced at Shakespeare, to buy that offtake from us. So we would sell them the concentrate, and then they would be able to use it either if it's an OEM to feed into their future, battery manufacturing plans, or if it's a strategic to potentially feed their own smelter and or sell it to an OEM. So that could be a big source of capital. It's extremely strategic, especially in North America, those offtakes. So that could be a source to help us finance. And with that, potentially also they could supply low cost debt for the debt portion of the project financing. So even without having a grant from any of the government organizations, we think because of the potential for us to be cash flow positive in 2025, and this is our belief, this is yet to be proven, but we do believe that we can be, and this is what we're striving for. And then having a strategic investor either purchase the offtake or invest in Magna for the future offtake, we think are two ways that we can move both Crean Hill forward as well as Shakespeare. That being said, we're still optimistic. We're going to hear back from the U.S. Department of Defense before the end of the year. Nothing's changed on the macro sort of front and what the U.S. is trying to do to bolster the North American supply chain for critical metals.
And do you think it would make sense to add a third spoke? In other words, another sort of low-cost acquisition as with Crean Hill?
So we are always looking at other opportunities in the Sudbury Basin, not outside of Sudbury, but in the Sudbury Basin. We're in discussions with all the three major mining companies that are in production right now in Sudbury to discuss their non-core assets. I think that some of the assets that are here in the basin that are not in production are an extremely good fit for what Magna is trying to do here. And with our, I would say, more nimble company with low overheads, a lot of these projects that don't make sense to the majors could make a lot of sense to us, much like Crean Hill. So there are some other assets in Sudbury, and we can't determine always when those will become available, when a deal could be struck. But I'm quite optimistic in the next 2 years we'll be able to, tuck in. We'll call it a tuck-in, another acquisition, much like Crean Hill, that's low cost, has great exploration potential, especially footwall potential, and then historic resources that with some additional drilling could become quite significant and could become that next spoke in that future hub and spoke production model.
Great. And then my final question would be, so I asked you a similar question in our last interview, but my question is a little bit short-sighted now. Where do you see Magna in 3 years?
Yeah, so in 3 years, I see us as a positive cash flowing company producing from Crean Hill. And I think in 3 years, we'll either be starting, into the construction phase of Shakespeare, or, very close to starting production. So again, some of these things that we're not going to build Shakespeare unless the cost of capital is correct. So we will, definitely continue to pursue, lowest cost of capital for that. But in the meantime, if we can be making free cash flow from Crean Hill by selling ore, that's a great place to be. And really, once that happens, there may be no need to do another equity raise. Unless we're going to do another acquisition or another development project for, say, a new deposit or something.